today. Today I'm going to go over the spreadsheet for my M1 Finance Roth IRA. When I opened this account, I had thought I was going to just be adding to the 2020, but because of the Rona, the health situation that's going on, one thing I did not realize is that with the government extending the tax deadline to July 15th is that you could fund for 2019 all the way till July 15th. Normally you can only add to the previous year until April 15th of the current year. So I decided that I would fund last year, as that's a either you do it or you miss out on it. So basically I decided I would take and put most of my money into a monthly paying dividend ETF, which is the SPHD, high dividend, low volatility ETF. That way, every month, basically I would be able to get dividends every month. So as of right now, every time I get paid, I get $5.63. That's basically $5.63 every month that I will receive from that one ETF. And then I also decided I would buy these corporate bonds, this long-term corporate bond fund. That is also a monthly paying dividend ETF. And with that one, every time I get paid, I will get as of right now, I will get 32 cents every month. So I decided to put most of my money in the SPHD, as that was a 5.81% yield is what it's getting currently. So that's a pretty good return on my money because this is all going to be tax-free. So for the initial year, I was going to try to get as much highest yield as possible in the somewhat safest way. Shortly here, I'm going to reevaluate my portfolio percentages and probably realign the pies a little different for the 2020 contributions, as I think I'm going to rearrange the amounts to put more money into the total stock market index one. But I do have 4 funds in this. I decided to just go with ETFs because it seems like the easiest thing, and we're going to be doing the dollar cost average, which seems to be basically with the limited amount of money. You can only put like $6,000 a year in here. I figured I would put it in the stuff all the big time investors say, if you don't know what you're doing, you should just put them in ETFs. So, and then let everybody else do the work for you. So that's what I'm doing with this. So if you want, make sure you tune back in later to see how we rebalance the portfolio for the new money going in. But real quick, we'll just go over what investments we have, the yield on each one, and basically how much money we've made. So with the SPHD, we basically have 36.5 shares, and it's currently worth $1,162.99. It pays a $1.85 dividend. That's a yearly dividend, but it pays it monthly. So that's basically a 15 cents per share dividend on a monthly basis. We're currently down $23 on it. At one point, we were up about $300 on this one ETF. As you can tell, there is volatility even with a low volatility ETF. But basically, the low volatility in this ETF means that the stocks that are in the ETF have a low volatility, but the fund itself doesn't necessarily mean it's a low volatility. But the good news is if you put money in every 2 weeks or once a month, that more than likely you're going to be able to lower your cost basis. Just like now, like our cost basis is currently $32.44, and the stock price is $31.80. So if we were to buy more funds today, we would be buying more shares at a lower price. But as you can see, we've been at a very different amounts as we've been buying, anywhere from $3.18 all the way to $37. So the next one is the Vanguard Total Stock Market Index. Our portfolio is 15% made up of the VTI, and we only have 1.5 shares. it's worth $236. It pays $2.75, which is a 1.18% yield, and we're currently up $3, so that's not too bad. But every time we get paid from BTI right now, we're getting $1.07. That is a quarterly payment amount, as they pay 4 times a year. We also have the BYM, which is the high dividend yield ETF by Vanguard. We only have about 1 share of that. It's currently worth $78, but they pay a $3.40 dividend, which is a 4.43% yield. So when we get paid by them, we get paid every 3 months. And as of right now, we receive 87 cents per payment. And then, like I said, we have the long-term corporate bond fund. We only have about 3/4 of a share, but it's worth $81, and it pays a $3.80 dividend, and that's the yearly payment, and it pays it every month it pays. So we basically get paid 32 cents every month, but because we don't have a full share, we have only received 22 cents. So over here we have our deposits that we've made. Basically, I've been doing a $5 per day deposit. So every week I put $35 in there, and I decided to do the 52-week challenge, where you start with week 1 of the year putting $1 in, week 2 $2, week 3 you put $3 in. So I've been doing that. I started it before I had the Roth IRA, and I decided, because of going to the ATM was too dangerous nowadays, that I would just start putting my money in here. So I started about week 17, and then as we go on, I will add the money that's sitting in the jar at home into the Roth IRA. But every week we've been making our deposits, and then we receive some dividends, which I put over here so that I can keep my money and the money my money makes separate. As you can see, I just put in the $35 for the $5 a day deposit, and then also my $32 for the $5 per week, plus the 52-week challenge deposit. Over here, I have the dividends I received, just so I can kind of keep track of how much each fund is making. And then this is the spot where you keep track of the days you get paid. And then over here, this is my whole investing plan, I guess is what you would call it, so that I can guarantee I'm going to put money in. Basically, this is the $1 a week challenge here, the $5 a week challenge here, and then the $5 a day deposits here. So all the green ones are the ones that I've already put the money in. I kind of backdid this one real quick. And then as we go on, as I pay them, I will mark them off in green. But down here, this basically shows you the total of how much money you will end up putting in if you do these 3 challenges all together. So, and if you decide you don't have that much money, the real easy thing to do is you can just pick one of them, and you can see how much money you will end up putting in. But the good news is one thing I do want to point out is this little column over here. These are the dividends I've received. So this is all together so far how much the dividends are. And then this 1 cent right here is basically the per day earnings of my dividend. It'll be neat to see that grow over time. And then basically this is the percent of the portfolio, and with M1 Finance, they keep it balanced. They keep each fund within the percentage you set up. So like currently I have SPHD is 75% of the fund, BTI is 15, VYM is 5, VCLT is 5 also. So like every time you deposit money, when it goes to buy the stuff, it buys based on these. So like it's going to buy mostly SPHD, and then as it balances the dollar amounts out to make sure it stays within the percentage that you want it to be. So like once it's done purchasing all the funds, these will be pretty close to 75, 15, 5, and 5. Well, I just wanted to get this on there so that I have a base video. I'm basically going to run all of my investing strategies like a business. So every July, I'm going to reevaluate my investing strategy with the deposits and where my funds are. So I will be posting another video about how I'm going to readjust my percentages of my portfolio and my depositing amount as as I basically have been funding my 2019 Roth IRA, and I'm going to start funding my 2020 Roth IRA starting on the 15th of July due to the tax deadline. So the good news is if you're still sticking around, there is a link down in the description below if you do want to start your own Roth IRA. I'm going to also post some videos of some information that I had been given or that I found on the internet that I found very helpful. But if you want to earn $10 free by opening a taxable account through M1 Finance and a Roth IRA, you can do that. You basically will need $100 to start a traditional investing account, and then you'll need $500 to fund your Roth IRA. And then basically, if you use the link in the description below, you will get $10 free into your taxable account, and then I will also receive $10 also. So that is one really neat thing about M1 Finance, and it is very easy to use M1 Finance once you set your pies up of where you want to invest. You can do something as simple as put it in VTI or VOO, like an index fund, and basically just deposit your money. You just type in the amount of money that you want to deposit, and M1 Finance takes care of it for you. So you basically just have to get your bank account hooked up, put the money in there, and then M1 Finance does all the investing for you, which is very, very nice. It's like the closest you can get to like having a 401k at work where the human resource people take care of your deposits and everything. Well, hope you enjoyed the video, and if you haven't started your Roth IRA, remember that link is down in the description below. It's worth getting 10 free bucks. Thanks for watching.